So I'm Michelle O'Connor. I am the Global Comm Strategist with GBBC. I also have my own consultancy firm and was with TaxBit until August. So that's where you know me from. We're going to jump in, but before I jump in, I'm going to ask my panelists to introduce themselves.
Dan Tannebaum, I'm a partner at Oliver Wyman and lead our financial crime work. I'm also a non-resident senior fellow with the Atlantic Council.
Hi everyone, I'm Kat Cloud. I'm the head of government relations for Sumsub.
Hi everyone, my name is Marcin Zarakowski. I'm a CEO and founder of Recoveris. We do blockchain investigation, recovery of stolen or lost digital assets, source of funds reports, and then we also are building a platform that automates different elements of blockchain investigations.
Great, thank you. So before we kind of jump into the meat of this, yesterday one of the points that was made by one of the panelists was one of the most important things is getting funds back to victims. And I think that's where we can start. And I'd love to jump into what are some of the solutions that are in market now or you're seeing actually drive positive impact to address the illicit finance and challenges that crypto has?
So it's a very complex question, and there is no one perfect solution that can return assets, as we know with blockchain-based crypto assets. Definitely, we have a whole variety of different blockchain analytic tools that allow us and investigators to trace how the digital assets move, whether the movements are illicit or legal. We can all monitor that. Every single transaction is stored in a publicly available, auditable ledger. Those tools provide, they have huge data sets of attributions, so we are able to identify if specific wallet or a service belongs to an actual company or individual if we have such data. The problem is that today, just tracing is not enough to get the assets returned. Because, well, what does it give that I know where the assets are if I'm unable to return them? So what we see in our practice that it's not only about tracing, it's about the systemic approach. So whether we have law enforcement involved, these cases are almost immediately cross-border. Right, the victim can be sitting here in Switzerland. The perpetrators might be, based somewhere in Southeast Asia, and in a matter of minutes, stolen assets are disseminated into 5 different services in 5 different countries across the globe. Coordination of this is super complex. Then crypto assets can move in a matter of seconds or minutes. So time is of the essence. So unless we have appropriate tools, skills, knowledge, and know-how, and we can react quickly, these are the only key factors that can allow us to potentially recover stolen assets.
Kat, anything to add?
So I just want to add from the regulatory perspective as well, because I think I don't want to call it a solution, it's a step in the right direction, is the obligation for travel rule and we're seeing more and more countries are starting to implement travel rule, and I think that is, like I said, it's a step in the right direction. It's focusing on encouraging transparency within crypto. So for those who may not be aware, travel rule is essentially a requirement where if I'm going to be sending money, crypto to Dan, then you have to show the details of the wallet holder. So I would be able to see that Cat Cloud holds this wallet and the money is going to a wallet that is held by Dan. Again, it focuses on that transparency. And so going to the point of how do we then return funds in the event that there's fraud, if we are operating in a country that requires travel rule, it makes it that little bit easier to try and identify who is the person who should have actually received these funds rather than the fraudster who was able to get access to it. So we definitely have the solutions that the brilliant minds within industry are doing, but I think we're also starting to see that regulators are looking to try and also encourage these types of solutions from a regulatory approach.
Dan?
No, nothing to add.
So one of the themes that we're seeing, and it's not surprising because it's GBBC, so we bring in the private-public sector collaboration, but the theme of policy, regulation, and collaboration, I think, is really important. And historically, the crypto industry may have been a little bit less embracing, say, a few years ago. So if you look at some of the trends, and we see a lot of TradFi, traditional finance, coming in because they see the TAM of the industry. Dan, where do you see kind of the convergence between the perception or actualization of illicit finance TradFi and then getting comfortable with the crypto blockchain space?
No, and thanks for the question. I do spend most of my time in the TradFi space, so it has been a lot of time working with larger GSIBs that are trying to figure out their path in the digital asset space. I think there's still a reluctance in some pockets of the world for firms to engage in offering in this space. I think we're seeing more and more banks that are beginning to operate performing custody services, obviously something that's lower risk. But it is evolving. Using an example of the US, and we were talking about this earlier, I do think the appetite in particular, obviously we have Genius and whatever ends up coming out of the Senate in its final form. The regulators are really not accepting banks to reject crypto in any form. So whether it's them trying to transact themselves or having crypto-oriented clients, like there's really no ability for banks to say no anymore. Now, where this is becoming an issue is, as we know, not all players in this space are created equal that really care about illicit finance related issues. And so the conditions are really being set up with the debanking agenda that's totally unfounded, and all it would need is a lawsuit to kind of strike it down because there is no right to banking in the United States. You're going to end up bringing the bad in with the good, and it's going to end up at some point blowing up in some sort of event that will end up tainting the industry that has worked so hard to get out of this reputation damage again. Yeah.
So I'm just going to throw this out and then would love to hear your thoughts. So out of what we just listened to, the president did acknowledge and encourage our industry. So that was a glimmer of positivity. If you look at what you just mentioned, having been in this space for more than a decade, there have been a lot of boom busts and black eyes that the industry has suffered. What are some of your biggest concerns if we look at the loosening of some of the U.S. and I worry following suit other countries? What are some of the concerns around less stringent regulation or a move to really go back a little bit to the wild, wild west?
I mean, I'm happy to open it up. I mean, certainly those crypto firms that are domiciling themselves in less regulated countries or countries that allow them to write their own regulations governing their business, and then attempt to set up U.S. operating subsidiaries with some arm's length relationship that isn't really arm's length, that are allowing them to function as a conduit for those funds offshore. Those are some of the concerns. There's obviously been a number of organizations that I could be alluding to that are set up offshore, that have U.S. operating entities, that are trying to be the legitimate public face of these businesses in the U.S. But I do think those links are potentially a question, especially in this environment where, look, crypto's buying a ballroom where the East Wing was. So like there is very little appetite to go after these businesses, and a number of Department of Justice investigations that I was a part of, you will not hear of again because the statute of limitations will run out by the time that guy's gone. So, I mean, it is an interesting scenario, but those kind of offshore countries that are more kind of open to kind of any sort of business in this space trying to open up shop, that's the bigger concern.
I cannot really comment on the situation in the US, but speaking from the European perspective, whether we like it or not, the current US administration and Trump did a lot to actually encourage many key stakeholders here in Europe. So we see very traditional conservative Swiss banks opening up to crypto, and being in the space for many years, and just running a company that is not touching crypto itself, but is doing just software services. It was impossible to open a bank account in some of the traditional banks. This has changed. Banks are offering crypto investment opportunities to the clients, and slowly are also accepting withdrawals and deposits, also exposing themselves to external risks. So this has been happening. So that's kind of comment from my side, how we see it in Switzerland. We advise many of those players. We also, it's an anecdote that I sometimes say, one of the big four companies told us last year, called us and said, can you advise us? Because our leadership has been neglecting crypto assets for many, many years. Say, this is something we don't want to touch. And now they realize it's not something you cannot you cannot allow us not to touch. It's gonna be everywhere. And finally, we also see that I think when you look at the adoption of blockchain technology, what's been driving it significantly are stablecoins, and it also translates to the illicit activity involving stablecoins. So in the recent crypto crime report that was released by Chainalysis, the statistics say that 86% of all the illicit activities involve stablecoins, which kind of means that irrespective of what's happening on the crypto market, if Bitcoin drops 80% today, illicit activities will be still continuing because they will involve stablecoins, which have stable value. So this is another trend that we see, and it's been growing because I think last year it was around 50-60%. This year it was 86%. So it's really growing.
I think just quickly I think for me, I don't want to say that regulation is the answer. I think we need to find a happy medium between the two. But I think the trend to deregulate is not the correct direction. And I think for us, the biggest concern that we actually have is more on that trust layer. So because we are a digital identity verification provider, our key focus within the crypto market is to insert that layer of transparency, to start encouraging people to have the clarity of where are the funds going, who is it going to be, who are you paying? Are you paying an individual consumer? Are you paying a corporation? What is actually happening behind the scenes? And I think what we're seeing with this deregulation is that also then tends to lead to less transparency. And that's going to directly impact if people actually trust the market. And I think that's one of the biggest challenges over the next couple of years. And I would almost argue it's the biggest challenge that crypto has had to date, is that a lot of people have been like, oh, I don't really trust it. I don't want to interact with it. So I think for us, the biggest worry we have is with this trend of deregulation is there's almost this trend of less trust. And we don't want that to happen. We want to partner with people. We want to encourage people to use it, but use it in a trustworthy and transparent way.
Also, what we see in our practice is that a very big problem still are fully verified, fully KYC'd money mules accounts or drop accounts. As I understand, this is a common problem for TradFi and, let's say, DeFi or crypto world. Mike, I know what was also becoming viral last weeks, maybe many of you have seen on Twitter X, this super sophisticated deepfakes, which actually scares the shit out of me. And I'm just wondering, I wanted to ask a question to you guys. I mean, you guys are providing this type of solutions for KYC. How can we protect from such situations?
I think there's a lot of things you can do. My answer is never going to be completely go offline. That's not the answer, because let's be honest, that's not something we can do. So what we've started to do a lot, and we have an entire team that is dedicated to looking at deepfakes, to understanding how, putting themselves in the mind of the person creating the deepfake, to understand what's the mechanisms they use, how did they get the photo of the person, how are they then implementing it to try and make it a deepfake. And one thing that we've actually launched in November of last year is a partnership with universities. So we've signed 2 partnership agreements, one with the Constructors University in Bremen and another one with Nanyang Technological University in Singapore. And we are focusing our research on building solutions to put a watermark on your photo. So if you've posted a photo of you on social media, could you choose the option to then put a watermark on that photo so it then can't be used for a deepfake? We're trying to trial these types of initiatives to better protect your identity documents, but even to protect your face, because those are the things that are being used across the board. So it's an ongoing challenge, but it's one that we are trying to tackle, and we're focusing on it because we are seeing an increase. Like the UK actually last year saw an increase in 94% of deepfakes. And in the Southeast Asian community, the #1 approach that people actually had was to have their account be used for money mules. So these things are not going away. These problems are not disappearing. They're continuing to happen. And I think with the use of AI, we're seeing more and more of these forged documents. We're seeing this as a growing trend. So we need to better protect against things like deepfakes.
We have 7 minutes left. What is one of the biggest common misconceptions? We have the traditional, Bitcoin and the adjacency to crime, which to your point is actually stable coins facilitating most of it. What are some of the biggest misconceptions you hear, either people in industry or just when you're having conversations?
I'm happy to start. I was in the Polish parliament 2 weeks ago presenting on actually the problem of scams and how to fight it. And I think the counterparties we talk to, they still believe that crypto and blockchain technology itself facilitates criminal activity. And our message was, and I will reiterate what I said at the beginning, if you have all the possible tools, knowledge, and experience, blockchain-based digital assets are much safer, easier to trace, easier to freeze, easier to seize. So that's, I think, the largest misconception that we see on the market.
I'd say that I think a lot of people still approach it, it's not going to happen to me. I'm not going to be defrauded. I can sadly tell you when I was a financial regulator, I actually fell for a scam. So it could happen to you. Luckily, it was only 20 quid, but I still fell for a scam. So I think there's this big misconception that, oh, it's only those like big like headline grabbing articles. That's illicit finance. And that's never going to happen to me. But I think it also starts at you individually being defrauded of 10 pounds. And I think we need to start thinking of it that way. And the solutions that we are introducing, be it for TradFi, be it for crypto, they need to have that mentality that it could happen at any stage for any amount. It doesn't matter who you are.
I mean, my father was just scammed on a cash-out Bitcoin deposit scheme, and the guy ran a Berkshire subsidiary. So, like this, I mean, really, like it can happen to anyone. The misconception-wise, and a lot of what I've done is focused on the U.S. market. With respect to banks that are looking at post-Genius Act implications, we can't touch stablecoin because we're going to have to go back to the origin of the minting of the coin. So like that diligence is just unfeasible. And as we know, like that is never going to be the expectation, nor does that make sense. And obviously,
I mean, nobody expects you to know where a
Correct.
specific banknote was.
Like you've got general counsels of some US-based GSIBs that are like, we're not going to touch it because like then we have to go back to the origin. It's like, do we go back to the printing press at the Fed, or to see where dollars leave, or like the mint when they're actually printing, or bureau? It's just that's one of the big ones that I see my clients using as an excuse to delay any activity in the stablecoin space, and it really is not going to last them too much longer.
But the irony is, even if you want, you can, because blockchain allows you to do that. Think about, just digital money, which are just the records in the bank's ledgers. You have no idea what happened before, right? Unless you really request all this information.
Some are genuinely confused because of that, because there is that traceability that you can go back to the origin, that you should, and those are not the same things. So
Yeah, you're right.
It's definitely a mixed bag of expectations.
I like ending on a positive note. What is something that you feel in the illicit space or asset recovery, let's expand it, or travel rule, CARF, et cetera? What's something that's positive that's happened or happening that you think will help balance out some of the negatives?
Slowly, very slowly, we see public sector opening up to private partners. So public-private partnerships are slowly emerging or getting some shape. It's not fast enough, but yeah, this is what I see.
I would definitely echo that. I think we've seen more and more regulators are reaching out to us and asking us the question of, how does this travel rule thing, like how does it actually operate? Can you break it down for us? So we're really seeing kind of that almost request for knowledge sharing and that genuine humility of saying, as I'm a regulator, I don't understand what this is, but I understand that it's happening in my market. Can someone who builds the technology explain it to me? So that's really, really encouraging to me that, yes, we're going towards more regulation, but potentially from regulators who understand it.
And for me, the investment in the compliance space, particularly in large crypto firms, has really become prominent. I can think back to some of the more mainstay crypto companies that a decade ago were like using investor pitches claiming they had licenses in states that hadn't granted a license yet, to now spending 7 figures on a chief compliance officer. It's definitely come a long way, and these guys really putting their money where their mouth is.
Well, I'm going to keep us on time. Thank you to the panelists. Thanks, everybody.
Thank you.